good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, January 13th, so stay lucky, my friends. We got a few economic news releases scheduled for today. Nothing real important, but one is a little bit, so we'll kind of jump right into it. We'll start off today with the trade deficit that was posted for November's numbers. We had back in October a negative $43 billion in deficit. We had estimates of maybe increase a little bit. And actually did. It jumped up quite a bit, negative $47.8 billion. So obviously our trade deficit is getting a lot worse and get better. So hopefully, with the weaker dollar or stronger dollar, maybe that might help out a little bit. But we'll see. Other item is import price index. This is for December, so it was up November 0.8%. And basically, they figured it would come down 0.2, and it did negative. So a little bit of prices on the imports were down, so that kind of helps out a little bit. And consumer sentiment, this is the one that has a little bit more meaning for us. This is how people are feeling about the economy, where things are at right now. So back in December, around Christmas time, it was right around 69.9. We figured it would improve a little bit, and it did kind of exceed expectations. So that's kind of a good sign. People are feeling better now. We'll see where things go. It's election year, so maybe people feel a little bit more optimistic again as the year goes through. We'll keep an eye on that, see how things progress. So we'll just jump over right now to the headline news. And basically the stock market's down right now. So because we didn't have that great economic news. But S&P is also looking at Europe today. S&P is expected to downgrade France and Austria today later today. So that will probably be some big news a little later today. It sounds like it's almost inevitable right now. So, but it sounds like it's just those two countries. Sounds like Netherlands and Germany are in the clear right now. As they're still doing okay. And then also they're still working on. I saw a little thing on MarketWatch. Greece is still they're working on their debt restructuring, which they're still working on their private investors that are buying their debt as to how they can structure it. So before they get their next bailout, that's due out in March. So that would be something that investors will be watching closely as well as we approach March, if they can get that step done, and what they're going to do if they're going to still. If they're not able to get their private investors agreement taken care of, they'll continue to provide them the bailout funds from the Troika, the European Central Bank, European Union, as well as the IMF. So let's take a look, see where the bond market is today and what interest rates are doing. And today we had a huge opening gap, about 18 basis points above. So we jumped up above the ceiling, and we're having continued success at 12 basis points. But remember, every time we have these opening gaps, they will close at some point. So next week, or maybe even later today, it could come out and come backwards and close this gap up a little bit here. So we're in a position where we could we have opening gap, and that will probably be closed at some point. But right now, rates are looking a little bit better today. Also, I want to kind of shout out there. There's been a lot of questions lately in the market whereas what's been going on, because it seems like we're showing a lot of improvement in the bond market, and we're not seeing that much being reflected on the rate sheets, and that's due to a new government fee that was imposed, that they built into the interest rates. I don't have all the specific information, but I'll try to get that for you for Monday, so stay tuned on Monday. I'll try to have that information to you. But from my understanding, it sounds like it's a guaranteed mortgage loan fee, and it equals about 0.45 points or basis points. So it's kind of like you're paying almost a 0.5% points for the same fee what you were before. So that's obviously affecting interest rates now in there. So all right, so that way you can kind of understand what's going on, why the rates aren't showing more improvement than what they are right now. It sounds like there was a recent fee that was added, and it's kind of put into the interest rates as of right now, blended into it. So so we don't really see that, and I'll try to have more information for you on that on Monday. But right now, interest rates should show some improvement today, as the bond market is up today. And right now it's above the ceiling, so we could create a new floor and ceiling come Monday if we close above this. All right, folks, you guys have a wonderful weekend. If you guys are on my site, please sign up and subscribe. You guys have a wonderful day.